Can you?
Yes, madam.
All right. So I think that what we had in the last class, all right? So I think that it has to be a 10% debentures. Yeah, because here is what we call this as a nominal rate. Yeah, the 10% debentures, or in this case, the 10% bonds. And then value is 400,000 value. It was issued at 440,647. All right, the bonds paid annually on 31st December. The current market rate is 7%. So in this, all right, you are going to use all the information provided in order for you to compute, all right, the journal entries in order for you to identify what is to be recorded. Yeah. So when we go back to question number 1 here, Emerald. Okay. Yes, it's issue of bond 10%. So we are going to receive cash of 440,647. So I hope that is clear because here is mentioned. Okay, buang kembali ya. Ini merah ni. Merah sangat lah makna. Let's delete no color. Right. So what you have to do, you must take note of the 10% debentures. Right. And then this is what you receive in your cash or your bank for 40647, and then the interest rate is 7%. This is the market rate. So you're going to use that information, the 10% and the 7% as well, for you to compute what is your interest, right? Your journal entry. So let's look again. So the first one, you have to debit your cash 440,647. All right, and credit your 10% bond. So is this clear? Right, I think that this one is very straightforward. It's just that when you want to have the journal entries for your finance cost and 10% bond payable and the interest payable, all right, so this is why you have to do this working, all right? So remember that this, you start with your whatever is the value of the bonds that you started. All right, in this case, you started with 440,647. So you start with 440,647 and using the 7% market interest. Yeah, so you use that 7% market interest. Oh, kemana saya? Tak nak tu. I nak dia warna kuning lah. Right? The 7%, so you compute lah 440 times by 647. So that is the 7%. And you know that the nominal interest is the 10% on the debentures. So the debentures, it has to be at the face value, right? The 10% of the face value. So 10% times by 400,000. That's how you get the 40,000. All right. And from here, what you do is that, all right, you are going to identify what will be the carrying value of your bond at the end of the 2016. All right. So initially, all right, your value of the bond was recorded as 440,647. All right. And then you add whatever is this, you add your cost of your financing cost at the market rate minus your interest of 10%. Right. So that's how you get 431,492. Right. So what is to be recorded here is that you have to look at the different here. No, the different. So at the end of the first year, all right, you're going to record this. All right, you're going to credit your interest payable. Why you credit your interest payable? Anyone? Why you credit your 40,000 interest payable? Have you paid the interest at the end of 31st December 2016?
No.
When are you going to pay the interest? 40,000. Right? So you're going to pay the interest of 10%, right? When the bond matures in 4 years' time. So when it matures in 4 years' time, you're going to pay the whole amount. Right, the whole amount of this interest, 40,000 times 4, 160,000, will be paid in the 4th year. Right, when the bonds become mature. Right, so at this point of time, you have to recognize your interest as 40,000. The finance cost to 3085 is actually from the 7%. right? And the difference between here is your, what is this? Okay, why do you have 9155 bond here, 10% bond? Why is that debited? Because this amount reducing, how do you call it? Why do you have 9155 here? It's the difference between your interest payable and your finance cost. So the 9155 is debited, so means that it reduces your bond kat sini. 440,647, now you minus 9155. All right, so because of that, all right, later you see that if you have this, all right, if you have this 440,647 minus 9155, you have 431,492. What is 431,492? You see that that is your carried forward figure. All right, means that your bond now reduced, means that it reduces the value of the bond, right? So means that towards the end of the fourth year, the value of the bond from 440 should become 400,000, which is the face value, right? So the one that we are computing here is the apa nama dia, the interest that you're going to pay later, right? So this is the current the what do you call that, the, because later when you do your, where is your, mana ke dia nama dia, where is your financial position here, yeah? So you look at your bond, is it, what is the bond? Wait, asset, equity, reserve. Ni soalan lain ke? Where is the bond? Non-current, okay, this one, right? So this is the figure that you're going to put at the end of the, at the end of the 2016, okay? So, right, so that's what will be the entry. So remember that if you are required to compute that, all right, just draw this amortization because it has the amortization table, right? Amortization table, right? So you draw this, you, if required, maybe you can just do the first year. Normally they only requires you to do the first year. So you put what is the beginning of your bond when you receive the bond, right? Receive the money, that is the value. And then that is the 7%, that is the market rate. And this is the 10% is the nominal rate of the debentures. And this is the value at the end of the year, right? So that's how you are going to represent your bond at the end of 2016. Okay, so if you look at the second question, it's the same, right? So you see that here, all right, let's delete this. We do not want that. So, right, so you have 8% 5-year bond, right? So that is 8%. And then the face value is 300,000. And what you receive 282,413. So you're going to debit your cash, the amount of 282,413, and the market rate is 9.5%. But remember that in this case, the interest is paid semi-annually. Right? Semi-annually means that they are going to pay the interest 2 times in a year. So whatever the rate, for example, 8%, 8% per annum, right? 9.5% is per annum also. So take note of the information provided to you. So if you look at Sapphire, for example, how they are going to record that entry is that, remember that the first one is that you debit your bank and credit your 8% bond, right? So debit your bank to 82,413. So that's how you have 282,413, right? So how are you going to have the second entry with regard to the interest cost or the finance cost? So remember that 282,413, but remember because they are paying you 2 times interest during the year. So the 8% interest, right? For example here, if normally the interest is if the interest is 0.08 and the value of the bond is 300,000, right? So how much is that? 8% on the So that is 24,000. So the 24,000, because you are paying every twice in a year, all right, means that every June and December. So that's why it now becomes divided by 2. If you look at the computation, it's 8% times by 300,000 divided by 2, because why the payment is in twice a year, right? So you take note of the 12,000. So that amount is, so here, all right, if you are required to generalize the above transaction narration are not required. So what you are going to do is that I think that you have to have interest payable, because this one is finance cost for the year, right? So that's why they only make it 24,000. Yeah, but when it should be right. You do it 2 transaction, means that for every 6 months, which is the 30th of June, and then you end up do another transaction on 31st of December, right? So if you were to have that, all right, so this is for the year. So if you were to have, let me just copy, insert, hold on, insert. If I were to have this, right, command C, command V, command V. So I would, if I were to record that as 30th of June, right, and there was is 31st of December, yeah, so the interest payable here is only 12,000, right? And then I will have the 7% bond. Why is it credited? I thought the 7% bond should be debited. Oh yeah, why? Because remember that hold on, yeah, 24,000, because you have to record this 113,415, right? So why do you have this one minus? In this case, right, it's a credited, right? Why is it credited? Because the bond was issued at a discount, right? The face value is 300,000, but then it was issued at 282,413. In the first example, the bond was issued at a premium, right? So it means that what's question number 1, right? So remember that this 400,000, but what you get is 440,000, means that the bond was issued at a premium, right? So when you record, right, you record on the first question the financing, the 40,000, but then the what do you call this, the balancing figure is on the debit side, yeah. But on the next question, because it was issued at discount, so the 7% bond is credited. It means that this one is the balancing figure. So this one is instead 2896. I would put this one as 13415. Okay. 13415 plus this minus this one. Okay. Apa tak dapat? So this one should be 12,000. If I were to write, right? So this one is plus this minus. So that's the balancing figure. Right. Similarly, if I were to have this 12,000, here would be 13,482. Right. So that's from the computation of the amortized table. So this would be the balancing figure. Okay. Do you get that? So the difference is that the first answer is done for the year, right? So it means that it's for 12 months, but the second transaction here, I show you that the transaction done if the payment is recognized on the 30th June and 31st of December. Is that clear? Right. So as you can see that at the end of the year, you are going to recognize this value, right? This amount to 82 as per in your statement of your financial position, right? So your non-current liabilities bond 285,309. Is it the same 285,309? 285,309. So that's the figure that it should be in your financial statement. Okay. You do have these workings, right? So later, I think that have I shared with you the answer for this?
Yes, madam.
Okay, so later you look back and then, because I'm sure this question will be in your final exam, right? So just make sure that you know how to compute your interest there. Okay, all right. So that is on the bond. All right, we have done for the bonus. All this we have done earlier. So let's go into the new topic, which is what's the topic? Google Chrome. I think that the new topic would be is it equity? Done. Oh, I tak bagi lagi eh. We are going into your financial statement and no, cash flow statement. Okay, let me put in create material. So we're going to have what's the topic? Cash flow. Right. I'm sharing with you. FAR1. Where's the slides? Slides, amended slides on cash flow. Have you seen your cash flow? Kau dah macam ada letak dah itu. Where's the cash flow? Yeah. This one, insert. I'm going to share another slide, which is from Williams. I heard that next semester everyone will be coming for the face-to-face session, is it? Apa kita nak tadi Slides. Let me have Williams. PowerPoint presentation. Okay. Nampak tak cash flow? Where's the cash flow? What? Tak ada cash flow. Where is the cash flow? Financial statement analysis. Can you see cash flow? Mak tak ada lah pula cash flow. No kenapa tak ada cash flow? 11, chapter 12 mana chapter 12? It's not here. Pelik ni. Chapter budgeting. Okay, tak apalah. It's okay. Later I check for it. Ya. Alamak, ada satu lagi lah. Your tutorial. Hai. Tutorial on cash flow. Come on. Banyak betul step dia. Tutorial. Can you see tutorial on, where is the tutorial on cash flow? It's not there also.
Topik 12.
Topik 12. Okay. Okay, I give you both. Okay, insert. Save. Okay, let's look into your, mana dia? Dah tak sempat pula. Then cepat jumpa kat dah. Mana dia? Okay. Can you see this clearly? The statement of cash flow?
Yes.
Okay. So there are only 10 slides now. Okay. So what is a cash flow? It's a statement which report a business cash receipt. So namanya pun cash flows, right? The flows of the cash, right? Cash receipts and cash payment for a specific period, right? It reports on the sources of cash inflows and the reason for the cash outflows. And it reports why cash increased or decreased during the period, and it covers a span of time. It means that it covers a period from, for example, beginning of the year until the end of the year, right? So it gives you the summary of the movement of the cash, right? And then the statement explains why net income as reported on the profit and loss does not equal the change in the cash balance. All right, remember that in accounting, we are using the accrual methods, right? So when you talk about accrual methods as compared to the cash basis, yeah, so mean that cash basis accounting is that where you record your entry only when you receive cash or you make payment. But in the accrual accounting, right, not only you, even though you do not receive cash, for example, when there's a sales, right, there's no cash received, you're going to record that as your accounts receivable, right? Similarly, when you purchase your materials, right, from your supplier, if you do not make payment or you purchase on accounts, so you're going to create accounts payable, right? So it means that there's no cash inflow or there's no cash outflows at that point of sales or purchases. But you still record that and you still have to recognize that in the profit and loss. Yeah, so that's why you see that your profit will not be the same as your cash balance, right? So the cash flow, right, helps you to predict your future cash flow as well. Yeah, because looking at the statement on your cash flow, you'll be able to see how is your operations, how is your finance, and how is your investment, right? You will also able to evaluate the management in terms of the cash management, right? And also to predict ability to pay debts and dividends. All right, what is a cash and cash equivalent? So when you talk about cash, you are talking about your money in hand. So cash here refers to both cash in the form of cash, also your money in the bank, right? So cash. Cash equivalents demand deposits, all right? So and short-term, highly liquid investment that are readily convertible to cash and that are subject to an insignificant risk of changes in value. Right, so sometimes we have the cash equivalent in the form of shares in the market. Yeah, so you have shares in your market where you can easily sell. Right, whenever you need cash, you can just sell your shares in the market and immediately you get your cash. So because of that, even though it's a form of shares, that is what we call cash equivalents. Yeah. What about bank overdraft? Bank overdraft means that when you have this is kind of bank facilities, right, given to businesses, whereby when doing businesses sometimes you have to not borrow money, right, where you use the money from your cash from your bank account, but it happened that at any point of time there's not enough cash in the bank, so the bank allows you to do an overdraft, right? So it means that you, as if, right, you borrow money from the bank for a short period of time, and normally the overdraft, of course there are fees for that services, and then normally overdraft is a short term borrowing from the bank. Yeah, so you will pay in the following bank statement, and it means that in the follow when you receive the bank statement, you will immediately pay back the bank, otherwise interest will be charged on you, right? And when talk about the classification of cash flow, there are three types of activities, right, under your cash flow. Number one is what we call operating activities. Yeah. So later we'll see that when you look at the cash flow, there are three types of activities shown. Yeah, the first one is your operating activities. So the operating activities shows you the cash flows. It means that when we talk about cash flows, it could be inflows, it could be outflows. Yeah. So if inflows means that it's a positive figure, but if it's an outflows, then you see that there's a bracket there, right? It's a negative, means that cash outflows. Right. So all these are related to your activities that create revenue and expenses in the entity's business, and is often the most important category of your cash flow. The second of then we are going to classification of cash flow. Right, to present cash flow from operating activities using a direct method, right, showing actual cash flow from operating. Or you are using the indirect method where profit before tax is reconciled to cash generated from operations. So it means that, right, what I mean by here is that when you want to prepare your cash flow, you have to make use of the information available from your financial position, right? So from your balance sheet or from your statement of financial position and statement of your profit and loss. So you're going to prepare your cash flow statement. So how are you going to prepare that? All right, the only on the operation, right? There are two methods for you to prepare. One is the direct method, or the other one is the indirect method. All right, I think that in the exam it will be the indirect method, right? Where we are going to make use of the information from the profit and loss statement as well as from your statement of profit, statement of financial position, right? In order to reconcile to cash generated from operation. So under indirect method, we start with accrued income and adjust to your net cash. So later we'll do an exercise on this indirect method, right? For the investing activities, is the second category of your cash flow. Means that, remember, you have three classification. You're going to classify that into operating. The second one is on the investing, right? The name is investing, or what you call investment. So anything with regard to your cash receipts and cash cash payments that increase or decrease your long-term asset, or in other words, your non-current asset. So for example, when you purchase your asset, your non-current asset, for example, when you purchase your building, right, your land, for example, or your equipment. So all these are non-current asset, all right, including the sales and purchase of your non-current to be used for business operation or long-term investment. So it means that any cash inflows, outflows related to your non-current asset will be shown under investment activities, or investing activities, right? And then the third classification is the financing activities, right? So any transaction related to cash flow arising from the way entity is financed. Remember that financing, it means that how is it being financed? So you're looking at the liability and the equity, right? Whether it's financed by debt or equity. So here we're looking at debt. We're not looking at the trade debts, right? We're looking at your bonds or debentures. So it means that these are how it's used in order to finance the business, or you're talking about equity. So anything to do with the shares will be shown in the financing activities. All right, it also includes the cash flow and outflow involved in long-term liabilities and equity. So remember, the long-term liabilities here refers to your debentures. So because these long-term liabilities is used to finance the business. Yeah, so that's why it shows in the financing. Example is when you issue your shares. Oh, why is it not working? Right? So when you issue shares or debentures, or when you pay out dividends, or when then there's a redemption of bonds, all this will be shown in the financing activities. Yeah. Right. So what is the objective of cash flow statement? All right, to monitor the cash inflows and outflows of the entity. All right, because the cash, all right, represent the liquidity of the company. So you're talking about liquidity, how much cash the company has. All right, what is the ability of the company to pay out, right? Their short-term obligations, for example. To determine the capability of management in managing or utilizing and generating cash, predicting and evaluate future cash flow for various financing decisions. And finally, so what is the kenapa I bunyi? Mati je ni. Right, what is the purpose of cash flow analysis? Right, why you want to analyze your cash flow is in order to maintain the financial health and viability of an entity. What problem can be identified from cash flow analysis? You can see the failure of profitable business because of its inability to pay its obligation due to running out of cash. So remember that some companies are doing very good, all right? For example, their sales are very high, right? But they have problem with the cash because why? Even though they have sales, but all these sales are credit sales, right? So what the problem is that they are not able to collect sales or collect their accounts receivable. So they cannot collect cash from their accounts receivable. As a result, even though company is making a profit, because profit is actually your revenue minus your expenses, but if you are not able to collect your cash, then there's an issue on the sustainability of the company, right? So that's the cash flow analysis. That's why I think that it's not enough here. Let me see. So before that, let me check on the what is the tutorial question looks like. Topic 12, right? So okay, tutorial question. You are given the statement of profit and loss account, right? And additional information of Super Mummy Berhad for the year ended 2017, 31st December 2017 as follows, right? So what you are given is that you're given the statement of profit and loss account and other information, right? So look at this. So you have profit and loss account. Mana dia? I punya highlighter. Right, you have profit and loss account. All right, you are given sales revenue, cost of goods sold, gross profit, and then you have dividend revenue. Why is it here? Why is it dividend revenue is here? Gain on disposal of non-current asset, salaries expense, depreciation expense, bad debt expense, advertising expense, interest expense, and income tax expense. And then you have the profit for the year is 169,500 ringgit. Yeah. So given this profit and loss account, right, and then you also given other information. For example, in this case, you purchase furniture and equipment. So what do you mean by purchase of furniture and equipment? Means that you make payment, for example, in this case, all right, whereby the total amount is 183,000, but out of these, you pay cash 154,000 and the balance is not payable, right? And the second one is that proceed from issuance of ordinary shares. So there's an ordinary shares, you issue 51,000, and then a piece of land that cost 36,000 was sold. So land, remember land. So whenever you look into this, all right, when you see furniture and equipment, you know that that is a non-current asset, right? So the non-current asset means that it will appear in your investing activities, all right? Ordinary shares is a financing activities. And again, you have land, but in this case, you do not buy, but you sell your land for 42,000 and there is a gain, right? Gain of 6,000. Payment, then you make payment of your long-term payable. So where would this long-term payable? Would it be in the operating, investing, or financing? Anyone?
Financing.
Very good. Remember that when we talk about long-term liability, all right, will be in your financing because that is how the company use the long-term note, all right, the note payable in order to finance the business. All right, and then we also have your payment of dividends. So again, it will be in the financing. You see financing? Yeah, betul. All right, and then you also have information about these cash, account receivable, inventory, accounts payable, and other paid, Z. Alright, other payables. So what are these? Cash, account receivable, inventory, and inventory. These are your current asset. Alright, accounts payable and other payables are your current liabilities. Right, so let me see that these three items is your asset, but here let us put that color, different color. Right, it's not, so this one is your current liabilities. Tak jadi pun. Tak apalah. Right. So you're required to prepare the statement of cash flow using the indirect method. So be careful based on the requirement of the question. In this case, they require you to do an indirect method. Then you are required to explain three importance of preparing statement of cash flow for the users. So this one is more of the theoretical part, right? Why is it important for you to prepare a cash flow, right? So how, given this information, how are you going to do to prepare a cash flow statement, right? So that's why in the earlier slide, it does not show you how to prepare the, so let me check, give me a few minutes. I check my other mom. PowerPoint presentation, we are looking at chapter berapa tadi ya? Chapter, oh, there's no chapter 12. Kenapa tak ada chapter 12 kat sini? Chapter 11 is on equity, I think. 12, 13 tak ada. Hilang. Tak mana nak cari Kenapa tak ada? Mom? Mama? Kenapa tak ada kenapa tak ada? Aish, macam mana nak cari? Dah ya, tengah fikir kat mana benda tu. Kenapa hilang? Where could it be? Kenapa dia hilang? Chapter tu. PowerPoint presentation. Tak puas hati ni. 7, 8, 9, 10, 11, 12, 13 tak ada. Mana dia pergi? How can I, where's my, okay, let me check one more place. Let me check if I have it here. Right. Mana. 9 and 10. Tak ada juga ni. PowerPoint. PowerPoint. Ada tak? Bismillahirrahmanirrahim. Retained earning. Nak buat apa tadi ya? Tak apa. Satu lagi. Chapter 12, 13. Okay. We have it here. Tak nak buka lah pula. Come on. Loading pula. Please. Saya nak download siap-siap. Download. Berapa nak masuk mana ni? Download dulu lah. Cepat sikit. Okay, save. Okay, I will share with you this later. Okay, let me show you that. So this is the from different textbook, yeah. So we have the cash flow from operating, investing, financing. Okay, cash flow investing activities, cash flow from financing. So that shows you what are the cash receipts and the cash payment from each of the activities. Yeah, the inflows and outflows, cash equivalent. So this is a direct method. So we want to look at the indirect method. So what is the indirect method? Cash payment. Direct method, indirect method, direct method. Long, but what I want to see is the indirect method. If you ask me, I don't even know. I'm not sure about direct method as well. I'm used to indirect method. Okay. Okay. So this is the indirect method, right? So you see that this is an example of a cash flow where you have these operating activities, right? And then you have the investing activities and the financing activities, right? But here, what it shows here is that these are the direct method, all right? The preparation is that. So let's look into the indirect methods, all right? So you see that reconciling net income with net cash flow. So this is what we call the indirect method, right? That's why in the question just now, they give you the statement of profit and loss account, yeah? Because they are going to reconcile your net income with net cash flow. So in the reconciling, right? So in this case, remember that the direct method or the indirect method is only for the operating activities, all right? For the financing and investing activities, there's no problem with that. It's just the same. You look at the cash inflow and the cash outflow, yeah? Right. So when you do the indirect method, all right, you look at the non-cash expenses. All right, for example, here is the depreciation expenses, right? So take note of your non-cash expenses. Number one is your depreciation. Number two is that when you dispose of your asset, if there is a loss on the disposal, that is also a non-cash expenses. Why is it called non-cash expenses? Because you do not have to pay for the losses, right? It's just an accounting record on the disposal of your asset, whether you have a gain or loss on the disposal. So if you have loss on the disposal, then it means that that is a non-cash expenses. But if you have a gain on the disposal, right, the gain is a non-cash income. Can you remember that? Yeah. So these are the three things that you have to look into when you do an indirect method. Right. The non-cash expenses is your depreciation and any loss on the disposal. Maybe later we will find other types of non-cash expenses as well. But the most common is your depreciation and the loss on disposal. And then you also have non-cash income, which is gain on your disposal. All right. Then you also have to take into account the timing differences. All right. So you're going to look at your accounts, your current asset and your current liabilities. All right. That's why remember that there's now the question, where is it? Manika? It gives you, not this one, mana dia? Right? It gives you the statement balances of your current asset and current liabilities. You can see here is 2017 and 2016. All right, why they give you information? Because it shows the timing differences. All right, you have balances as of 2016 and you also have balances as 2017. So what you're going to use this information for your indirect methods is that you're going to look at is there an increase or there's a decrease in the balances? Of course, when you talk about 2016 to 2017, you want to see that from 2016 to 2017, is there an increase or is there a decrease in the your current asset or your current liabilities, right? For example, here you have 2016, right? You have a balance of cash of 36,000, but in 2017 there's an increase. There's a balance of 133,500. So here, will you say that, is that an increase or decrease? Right? Is the cash balances from 2016 to 2017, is the cash balances increases or decreases?
Decrease.
Decrease, are you sure? Kalau 2016 balance is 36,000, but 2017 there 133,000. Increase or decrease?
Increase.
It's an increase. Yeah, here is an increase. But what about your account receivable? Same, right? It's an increase because 2016 balance is 42,000, 2017 increased to 51,000. So that's an increase here. Yeah. What about your inventory? 2016 balance 93,000, but then 2017 67,000. So that is a decrease. Right? So this is why you need to know, right, the balances to see the movement, right? Because later you want to look at the differences. So here is also decreases, right? But and then your other payable is increases. Can you see that clearly? Whether the balances increase or decrease, right? This one is very important later because you are going to use this information to decide whether you are going to how to do adjustment in your cash flow statement. Okay, all right. So that is what meant by having these timing differences. Your accounts receivable, your it means that, in other words, you're talking about your current asset and your current liabilities. Right. Next is that, right. So what you do is that, all right, from this net income, right, this is the indirect method. Starting from net income, you're going to do adjustment on your current asset and current liabilities, right? So you have to look at the changes. So just now yang kita tengok changes lah, whether it's increase or decreases. All right, so you're going to take note of the changes in the current asset and current liabilities, and then do adjustment. Yeah. And then what else you need to do is, there is any losses. All right, this one you're referring to the non-cash expenses. All right, non-cash expenses, for example, your depreciation and amortization. So what you do is that you're going to add back. Remember that you're talking about cash flow sekarang ni. So in your profit and loss account, if there is an expenses that is a non-cash expenses, all right, so you have to do adjustment. You have to reconcile. Why? Because in arriving to profit, you have deducted your depreciation. Remember, depreciation is an expense. Similarly for your amortization. Depreciation is for your PPE. Amortization is for your intangible assets. So these are expenses, but it's a non-cash expense. So when you do your cash flow, you want to adjust, you want to reconcile those expenses that you don't have to pay for it. So in this case, right, in arriving to profit, right, remember that you start with net income. In arriving to your net income, you have deducted your depreciation. You have deducted your amortization. Why? Because these are expenses. So for cash flow, you're going to add back because you not reconcile, right? You're going to add back your non-cash expenditure. And then if you have losses, for example, loss on disposal, remember losses is an expenditure, right? It's an expense, but you don't pay for the losses. So that's why in arriving to net income, you have minus losses, right? So below you dah minus, then now you add back, right? You add back your losses. But if there is a gain on your disposal, right? In other, you gain, you campur net, right? In arriving to your net income, you have added your gains. So that's why now you have to minus your gains. Yeah, so this is thing that you want to remember, all right, when you do your cash flow using the indirect method. So we will have three things to remember. Number one is that you start with the net income, and then you add back or you minus your current asset and current liabilities, the changes. So the changes means that you're going to compare the opening and the closing balance. Yeah, the balance at the prior year and the balance, for example, in this case, 2016 and 2017, look at the changes, whether there's an increase or decreases. And then any losses, you add back. Gains, you minus. Expenses here, you add back. All right. Let me just double check with you. Let me see. Najwa Farid. Mana tak punya tadi ya? Mana punya tu tadi? Hilang. Najwa Farid, when you have your depreciation, when you want to prepare operating activities, you have to add back your depreciation or your amortization. All right. What is the justification for you to do that adjustment? Why you add back your depreciation?
Because it does not involve any cash transaction.
Very good. All right. Because your depreciation amortization is a non-cash expenses. So in arriving to net income, you dah deduct those expenses. So now you want to reconcile, you add back. All right. What about your gains? Kenapa you minus gains? Let us have Siti Nur Afika. Gains, if you have gain on disposal, kenapa you minus?
I'm not sure, madam.
Right. Remember gain, right? Gain is an income. All right. So in arriving to net income, you add or you minus your gains. Right? All right. In arriving to your net income, if you have gain on disposal, you add or you minus?
Add.
You add because why? It's an income. But remember that these gains or loss gains is a non-cash gains, right? For example, gain on disposal of your fixed asset. So when there's a gains in this case, because you that add back, that's why you minus. Because why you are reconciling. What you want to do is that you want to set off those non-cash items, right? So if you have deducted the expenses, you add back. If you have minus, then you add. Salah. Kalau you have minus, you add back. Kalau you dah added, you minus. All right. So then you get your cash flow from your operating activities. Right. So then let's see what they do. Okay. So remember that just now we look into your current asset and current liabilities. Right. So this is the other thing that you must remember. Right. Just now where were we? Okay. Nampak ni, I tengok cash, whether there's an increase. Right, so that's why I nak buat ni warna lain ni. This one I nak buat warna biru. Nampak? So you have to differentiate between your current asset and your current liabilities. Right, so your current asset, your cash, your account receivable, and your inventory. Right, so these are your current asset. And then your current liability here are your accounts payable and your other payable. So you have to put that into this, right? So if your current asset and you have your current liabilities. So if you have an increase in your current asset, increase. So how do you know it's an increase? You know, you identify, nampak? This one increase, right? So if your current asset increase, so how much is the difference? How much is 133,500 minus 36,000? 133,500 minus 36,000. So the difference is 97,500. So there's an increase of 97,500. Is that clear? So when there's an increase in your cash, right, it's a current asset. When there's an increase, then you minus. See? So you minus. So this one is I'm not able to give you the logic behind, but I would just draw, right, this formula from the very beginning. If current asset, when there's an increase, you minus. When there's a decrease, you add. But if your current liability is the other way. If an increase, you add. But if there is a decrease, you minus. I know that it's going to be a bit, confusing for the first timer, right? But you just remember this. Right, you can draw this formula again, right? So what you do is that if there, for example, current asset, if there's an increase, you minus. If there is a decrease, you add. But if a current liabilities has an increase, you add. But if there is a decrease, you minus. Okay, So I will put this, mana you punya FAR1. Sekejap Hold on ya. Okay. These are the key things that you have to remember. I put it in your WhatsApp group. Right? So easier for you to refer to that later. Where is it? Where is it? Okay. All right. And then what else you should know? All right. And these are the summary. Right? So, but you don't have to remember all this. Mana dia ni? Apa susah sangat nak move from here to there. Right? So this is the indirect method, the summary of what we have discussed. Right? You start with a net income, and then if there is any, you add back. So this one is the non-cash expenses, right? Sorry, not non-cash. So this one you add, and then this one you minus. All right. For example, here your depreciation you add back. Right? Account receivable, inventories, and your prepaid expenses are your current assets. So when there's a decrease, you add. Right? But your accounts payable and your accrued, when there's an increase, you add back. Account payable and your payable. So when there's an increase, you add back. You see? Okay, tak apa. Right? Okay, so let's do again where's your tutorial just now. Alright, so starting from profit before tax. So what you do is that you start with your 169,500. Alright, and then you're going to look into your profit and loss account. So look for the non-cash expenses and income. So we do have this gain on disposal. Apa ni aku buat ni? Right, change color. Tak nak warna tu lah. Alright. So we are identifying from the profit and loss, what are the things that you have to take into account. There's a gain on disposal, salary expense, and then you have your depreciation expense. Bad debt expense is okay, in advertising okay, interest expense okay, income tax expense is okay, right? So these are your non-cash transaction. And then later you purchase your furniture and then you make payment. And then proceed from issuance of ordination. Okay, let's look into your operating side dulu ya. Operating side you kena tengok kat sini juga. Right, what are the changes? You know that you have identified that as whether it's an increase or decrease, but you also have to look at the amount, right? The changes means that you compare the opening and the closing. So when is the answer? I think that we also have this answer, right? So I think it's a super mommy. Right, you start with your cash flow. Profit for the day, you have 169,500. And then you plug in your, okay, you plug in your depreciation. Where do you get the depreciation from? Okay, your depreciation just now is your 30,000. So you remember that depreciation is an expense. That's why you add back your depreciation. What about bad debt expense? Why is it there? 3,000. Anyone tell me why is it there? Well, I think this one because your ADA tu lah. Right? So, but bad debt expense, you do not pay for bad debts, right? You do not pay for your bad debts because it's just a recording, yeah? So that's why bad debt is included. So bad debt, you add back 3,000. Gain on the disposal of land, remember gain is an income, so that's why you minus 6,000, right? Gain on your, and then dividend revenue. Dividend revenue, why is it there? Why is it there? I'm not sure. Dividend revenue. Anyone can help me why you have dividend revenue there? I look at ada ke revenue kat sini? Tak ada pun dividend. Right? So I'm not sure about this. I will highlight this first. Okay? And then look at the changes in your working capital. Right? So remember that just now in your, where is it? Mana punya tadi? Alright, your cash is increased. So if cash is increased, plus or minus?
Minus.
Right? Bila cash increase, there's a minus. So how much is the difference? 97,500. That's why you're going to minus. What is your cash? Oh, tak ada pun cash. Ya, betul jawapan ni. Insert. Right, so minus 97,500. Okay, tak apa, kita buat je dulu. Account receivable, there's an increase. How much? The difference, 51 minus 42. The difference is 9,000. There's an increase of 9,000 plus or minus?
Minus.
Minus account receivable, 9,000. So you have it there, right? What else? Inventory, there's a decrease. How much is the decrease? 93,000 minus 67.5. 93 minus 67.5. So there's a decrease of 25.5 thousand. Plus or minus?
Plus.
Plus. So 25.5, tengok. Mana dia? There's a plus there. 25.5. Yeah. Okay, and then what's next? Accounts payable, there's a decrease. How much is the decrease? 39,000 minus 16.5. You have decrease of 22.5. Plus or minus? Account payable is a liability. When there's a decrease, plus or minus?
Minus.
Dia terbalik. Plus or minus? Accounts payable. I pun tak ingat ni. Sekejap. Apa dia tadi kita ingat tadi? Accounts, current liability, when there's a decrease, you minus. Is it? Betul lah kan? Dia terbalik kan? Betul lah ni kan? So there's a decrease, you minus. What is that just now? Accounts payable, decrease 22.5, so it should be a minus 22.5. And then other payable, there's an increase, 49.5 minus 39,000, increase of 10.5. So maknanya bila increase in current liability, you add, right? You add 10.5 thousand. So that's how you compute. Okay? Okay, that's it. Dividend ni I tak sure. Alright. Cash generated from operation. So what you do is that you total up all this lah. Okay, so you total up all from your net profit. Then you add all this adjustment. Okay, then you should get berapa ni? Right? Dash. Ni kita dapat. Sum of all this. 93,000. Cash generated from operation. Command S, I put it here. Command B. Bagi nampak sikit. Right? Net cash generated from operating activity macam mana ni? 262 ni. Okay, tak apa. Leave it first. Alright, cash flow from investment activities. Alright, so go back to the question. You purchase furniture, but what you pay by cash So this one will be in your investment activities. Is it investment? Investment. Yeah. 154,500. Even though you only the cost is 183,000, but you only pay cash 154,500. So that should appear in your investing activity. So when you make payment, all right, so you minus, all right, and then what you have, proceed from issuance of ordinary shares. Kenapa 51,000 dekat situ? Ni apa ni? Proceed from, alright, proceed from issuance of shares, it will be under investing. So this one, proceed from issuance of shares is a positive cash flow or cash inflow. That's why 51,000 is there. All right, and then you have piece of land cost 36,000, sold for 42,000. A gain of 6,000 was recognized on the sale. So the gain here, it goes to your operating operating activities. But the cost here, you receive cash of 42,000. This 42,000 should appear in your financing, investing activities. Yeah, where is your 42,000? You have this 42,000 because proceed from sale of land. Why you put in there? Because you receive cash of 42,000. Right? And then you have payment of long-term payable 25.5. Remember that long-term payable is part of your financing. When you make payment is an outflow. So that's why it's a negative. Right? What else? Payment of dividend. So dividend is also part of your financing. Your 16.5 is an outflow. So that's why it would be negative there. What else? You have done all this. So what will be now? So let's look at whether your cash from operating, let me see whether the computation is correct. Right, 102. And this one is correct. And 9,000. Okay, what is the net cash increase during the year? What is, okay, this one is what you do here, right? How do you get this? How do you get 169? You put in you have information about cash at the beginning of the year, right? Cash at the beginning of the year, you have, how much cash you have? Beginning is 36,000. So you put in your 36,000 at the beginning of the year, and then your closing is 133,500. So you can do it like this, okay? I would rather have it like this. Command C, Command V, and then I also Command C, Command V here. Right? I'm not sure whether the ones that earlier. Right. So what we have here is that delete kat sini, right? So you know that your cash equivalent is 36,000. That is the beginning. And then at the end of the year, you should have how much? 133,500. So you can type this 133,500. So you know that what should be cash increase during the year is the balancing figure. If you have end of the year minus your beginning of the year, so you should have this one minus 36,000. But this is the net increase 97,500. Wah, saya salah dah buat kat sini. Cash tak boleh lah masuk kat sini. Right? So if I were to delete this cash, right, we will have 190. So what will be here? You ambil total net of this, all right, then from the activities, from the operating, investing, and financing, you should get 97,500. Right? So here it means that your answer is correct, lah. Right? So how you get 97,500 is actually the net cash from the operating, right, plus your investing, plus your financing, right? So remember that when you do, all right, sorry, yeah. So this one, you should not have this, because cash should not be there, lah. Oh, tapi okay juga, right? You must know what should be. Right? So this is used for part of your cash flow at the end, right? Jangan letak dekat atas, right? So that's how you do it. Are you okay? Right, so this is the, right, so you should get 97,500, which is actually the net changes, all right, closing figure and the opening figure of your cash balances, right? And this 97 increase or decrease is represented from the operating activities, investing activities, and the financing activities. Okay, is that okay?
Yes, madam.
Right, it's already 3:20. I want you to do the other question. All right, explain importance. It's okay lah. Question number 2. You have question 2. Dua soalan je ada. Right? So please do. Question number 2 also required you to do using indirect method. Right? In the exam, final exam is also using indirect method. So I want you to do this question. I will discuss again in the next class, and we're also going to go into new topic, which is the financial statement analysis. But next week, Tuesday, is a public holiday. So how? Can we have class? Public holiday, boleh buat kelas ke? Huh?
I'm okay je.
Okay, yeah, it's okay because I will make a recording of the class. So if you cannot make it, I stop recording dulu. If you cannot make it next Tuesday, right, you can always watch my recording. Stop recording that. Okay, so